When you hear somebody talking about SoFi, what's the first thing that comes into your mind? Well, chances are if you're Bernie Sanders, you might just jump straight into saying they're a student loan refinancing company and that's it. If you're a little bit more informed, you might say that they're both a lending and an investing company. And if you're a constant viewer of this channel, you might also include the Galileo aspect and say that they're both a B2B and a B2C company. But what if I told you that SoFi was also an insurance company and a subscription offering? Not many people talk about those sides of SoFi because they're not very prevalent. But in this video, I'm going to explain the subscription offering and the insurance products and how they have the potential to be some of SoFi's biggest opportunities out there. First, let me start by saying that this is going to be a mega video. It's probably going to be longer than my original content. I've spent days seeking out this content, sourcing it, and finding it and presenting a narrative around it. And so what I'm going to ask you to do first and foremost is, if you enjoy this content, like, subscribe, and please share it out on social media so we can spread the word around SoFi. With that out of the way, let's get into it. Okay, so first let's start off with the insurance side of the business, and then we can go into the subscriptions to tie it all together. In a recent video that I put out on SoFi, I discussed 3 products that nobody was really talking about, covering a recent news article around SoFi partnering with Blink powered by Chubb for cybersecurity insurance. And upon doing some further digging, I realized that SoFi has a ton of different insurance partnerships out there. In fact, they bundle all of these together in a segment called SoFi Protect. It started back in 2016 with life insurance and has been quickly ballooning ever since. The original Bloomberg article back in September of 2016, when SoFi partnered for life insurance, highlighted that SoFi could face pressure from other companies that are underwriting faster. However, they were perfectly positioned for this type of product offering since their demographic is younger. So let's walk through all the different types of insurance that SoFi offers. And as we do that, keep in mind that the reason that SoFi can provide all of these is due to their partnerships. So how it works is SoFi partners with another provider and they take a referral fee for those services. They don't actually offer the service themselves as a principal. We will talk about this model and how it has the potential to change later on down the line, but first let's cover what the offerings actually are in today's landscape. Currently, SoFi offers auto insurance through Gabi, they offer life insurance through Ladder, homeowners and renters insurance through a partnership with LMND, they offer cyber insurance through Blink, and they also have estate planning through their partner called Trust and Will, which is one of the leading online estate planning platforms in the US. So as I mentioned, all of these are referral bonuses for SoFi. Currently, I'm on SoFi's online insurance portal where they highlight all of these, but if I click into something, let's say I click into Gabi, the auto insurance, I'm redirected to the partner platform's experience to continue my journey to even get a quote. And SoFi makes this very evident by throwing out a warning pop-up. And presumably, if I were to actually go through with a purchase and buy auto insurance in this case, I would be a client of Gabi's and not SoFi's. However, SoFi would receive a referral bonus for redirecting me onto that experience. Now, even as it stands today, there's still gaps in terms of what different types of insurance products SoFi can offer out there. Of course, the partnership with Blink for cybersecurity insurance was just the latest addition into this catalog added last week, but there's a whole ton of other opportunities for further partnerships that SoFi can present to collect more referral bonuses, such as, for example, pet insurance, disability insurance, landlord insurance, and a whole bunch of other avenues that are not currently offered. So the breadth of expansion in terms of how many different types of insurance that they can offer is an opportunity for growth for the business. But also the depth of their existing offerings is something interesting to discuss, especially because SoFi now is not the SoFi back in 2016. They have an expanded capability through Galileo, through Technisys, through Pagaya to underwrite in a more effective manner and to actually make smarter predictions with regards to the risk involved in the insurance. And just to dive a little bit deeper, what I mean by depth of their existing product offerings is for SoFi to become the principal themselves. In other words, to offer the insurance in-house powered by SoFi as opposed to just redirecting you to a partner's experience. Now, SoFi CEO Anthony Noto highlighted this in a June 2022 talk. He said, quote, "In insurance, we're just a partner. So we provide lead generation for home, auto, and life. we generate for our partners about $250 million of insurance premium per year. So it's about $1 billion run rate. That would be an area we'd love to be in as a principal at some point in time. If an asset were available at a low price and it was a technology and a team, it could be an acqui-hiring and be in that business. There's areas that we'd like to be in. So he basically highlighted the desire and he highlighted how they're going to do it through an acquisition. And in the Q2 earnings call back in August, he emphasized this position, stating, quote, "The team's also doing a great job as it relates to our insurance products, which is really a lead generation product. And you see all those revenue streams coming through in the financial services segment. On the insurance side, it's been relatively steady, but we're gaining market share there as a lead generator." Now, stepping back, the hints here are fairly recent, number one, from June and from August respectively, and they're fairly evident, right? We know from the Goldman Sachs Investor Conference back in September that Anthony Noto had a talk, which I highlight in this video here, all of the major takeaways. He was asked around whether they wanted to make a key acquisition or not. And he said that currently they have their hands full with the Technisys acquisition. They're still digesting that. But later on down the line, if a company does make sense, they do want to be a net acquirer of that company.
Could you talk about your positioning on more M&A deals?
We have to keep our eyes open to opportunities they present themselves, but we also have to balance executing versus the distraction of M&A, and I think we've done a great job of that up to this point. We've been very strategic in our choices as it relates to large M&A. Right now we're absorbing the acquisition of Technisys. We love what the business does for us from a strategic standpoint, what it does from an operational standpoint and technology standpoint, and we want to continue to execute against that. So unless something presents itself that's so game-changing as the last two acquisitions and is super attractive and it's a must-do type of thing, we're going to keep our heads down to execute.
In other words, if there was a deal that was too good to pass up, then SoFi would step in and act. However, if everything remained as it were, they still want to be heads down to digest the cost of the Technisys acquisition and carry on forward. But from an insurance point of view, from what Anthony Noto has said in recent months, we have a clear idea of SoFi's existing position as a partner, leveraging insurance as a lead generation funnel. We also have an idea of their ambitions in the sector to become a principal in the near future, likely through an acquisition with an existing partner, right? And putting together all of these dots, it doesn't take a rocket scientist to realize that the first companies that they're going to consider are the companies that they're currently partnering with. And just running through the exercise I thought was interesting. SoFi partners with Gabi on auto insurance. Gabi is powered by Experian, which is a $10 billion market cap company. So that's probably not going to be a business that they acquire. On cybersecurity, they partner with Blink, powered by Chubb. Chubb is gigantic. They do about $41 billion in revenue in 2021. And I think you know where I'm going with this deduction. They also partner with Ladder for life insurance, and they partner with Trust and Will for estate planning. Both of those, Ladder and Trust and Will respectively, are small companies, small enough to be acquired by SoFi. But personally, I might be biased. Personally, I think the most interesting acquisition for SoFi would, of course, be buying out Lemonade Insurance. Why? Well, SoFi and Lemonade partners on not one, but two products, homeowners and renters insurance. Lemonade is a company that I own, and from my experience researching them, they're a very tech-focused solution in terms of how they underwrite, how they take on risk, how they price those loans. They use technology solutions at the foundation of this. And this, I feel, is number one, aligned with how SoFi operates in terms of their Galileo and Technisys stream, but it also, I think, can provide synergies from the technology stack perspective. So basically saying the tech stack that Lemonade is using, the algorithms for how they make these decisions of underwriting loans, can be helpful to Galileo as well, to make that a more comprehensive and consolidated product offering B2B, which Galileo can then go and sell to other companies. Lemonade is also in a sweet spot. It sits around $1.5 billion in market cap, and recently they also purchased Metromile, which is an added benefit were these two companies to merge on the insurance side. Now, without getting too far into the hopium, although full disclosure, probably the title of this video, along with the thumbnail, is going to be some clickbait around SoFi and Lemonade. Sorry, I have to do it. I'm just going off of the most logical conclusions that I can deduce from Anthony Noto's own talks, right? He himself said back in June that if an asset were available at a low price and that it was a technology and a team that they believed in, that they can essentially augment and optimize into the SoFi stack, that the business would acquire them in order to become a principal and break into that insurance space. Now, I don't want to give you the wrong impression. This is not going to happen anytime soon because of what he said at the Goldman Sachs conference, that they're heads down, focused on their work and on digesting the Technisys acquisition. And even from talking about SoFi so much, we already know how much they have on their plate in the short and medium term as it relates to new product launches, options trading, their student loan moratorium, refinancing, their buy now, pay later service, pay in full. They have so much going on that it just doesn't make sense for them to do an acquisition such short term. However, should SoFi become a principal through an acquisition, the insurance industry is so large that this business is going to be unlocking a whole new runway for growth. And just think back to that quote that Anthony Noto had back in June 2022. He said SoFi alone is generating about $250 million of insurance premiums per year. That's $1 billion in run rate. And don't forget that by becoming a principal themselves in the insurance category, not only does SoFi diversify their business, number one, they also tap into a whole new industry, which is perhaps hundreds of billions of dollars in terms of run rate, number two, and they also lower their costs. So it's a win-win-win situation. But it's not going to be something in the short term, maybe not even in the medium term. It might be a couple years out. Okay, so now that we've covered the insurance, let me now move on to the subscription offering because I think it ties all of this together. And if you're still here watching this video at this point, and if you like it, this is your reminder to drop a like or subscribe if you haven't done so already. Recently, the business released SoFi Plus, which is their subscription offering. It's basically a perk to their checking and savings account. Now, I'm not sure that this was fully released or simply that the finer details have been released. I've seen posts on Twitter yesterday that it was officially released in some areas, although I couldn't find any press releases, and when I went to the SoFi website, the link seemed to be offline, which makes me think that perhaps the business is testing it in certain geographies. But we have the details of what SoFi Plus is going to look like from a benefits and how it's going to work perspective, so we can talk about that, even though it might not be fully live. SoFi has released an FAQ page around SoFi Plus, and a lot of the information that we're going to talk about here, we got from there. So what is SoFi Plus? I was going to make this a completely separate video because this is going to probably be a 30-minute video, but blending it with the insurance side made the most logical sense from a narrative perspective, so here we are. SoFi Plus is a premium membership that gives its members access to the most premium interest rates, rewards, and discounts across the full suite of SoFi products. Now, this is very important that they had this wording here in the SoFi FAQ, the full suite of SoFi products. We're going to come back to this. The only requirement needed to access SoFi Plus is to set up monthly direct deposits to SoFi checking and savings. You must have a recurring direct deposit of $1,000 a month or more to unlock the personal loan rate discount and no fee overdraft coverage. All other perks and benefits can be unlocked with direct deposits of any amount. So basically, in other words, if your main paycheck from your 9 to 5 is going into your SoFi account, then you would hypothetically be eligible for SoFi Plus. You don't have to pay a subscription fee every month to use this. It's based on how frequently you're using that checking and savings account. Now, currently, the benefits that are listed for SoFi Plus, this is from an image on Twitter, although the link on SoFi's site is broken, so take it with a grain of salt. Currently, the benefits for SoFi Plus are the 2% APY on checking and savings, which, if you saw my last video, and I'll tag it here, the company might be improving this return very, very soon. In addition, you get 3% cashback on credit card purchases, which in my experience is one of the more aggressive offerings, double the rewards, discounts on personal loans, preferred access, 2-day early paycheck, and no fee overdraft coverage. Now, all of this is fantastic, but why are we talking about this in the context of insurance? Well, if you're a constant viewer of my videos, you should have a fairly good idea of where this one is headed. In one word, bundling. I've been saying it nonstop for like 10 SoFi videos in a row now, whether it is for the cross-selling from lending products leading to investing products. I said it for the cybersecurity 2 videos ago, and I'm saying it now for all of SoFi's insurance streams with regards to SoFi Plus. Because think of a checking account that you want to open. The first thing you're going to do is you're going to compare all the different alternatives out there, all the offerings, and ultimately, you're going to go with the account that provides you the most perks. As a result of SoFi being such a diverse company with so many different business streams, They have banking, credit cards, lending, insurance, estate planning, investing, crypto investing. All of these can serve as perks for that main offering. So it can be more enticing because all of a sudden SoFi can start bundling these streams together through SoFi Plus as the connective tissue and offer you some perks that other businesses cannot. Competitors won't be able to physically keep up simply because they don't have the same business streams that SoFi has. For example, if I go with a traditional bank, they might not have an insurance offering, they might not have an invest offering, but SoFi does. And they can offer this as a perk for SoFi Plus. Imagine as a result of SoFi Plus, if you are, let's say, depositing regularly into your checking account, you automatically get an investing account opened in your name. You get one free stock, similar to Robinhood, and similar to that, you get preferential treatment on any insurance that you want that SoFi offers. All of a sudden, from an end user perspective, SoFi Plus is the most comprehensive rewards platform out there and a complete no-brainer when you're making a decision between what checking account should I open. But from a SoFi company perspective, they've just sold you on 3 alternative products that you're going to try out, and maybe you stick with 2 of them. Because we've talked about this before, there's ecosystem, there's network effect, all of these benefits that contribute to that cross-selling flywheel. And at the end of the day, you're basically onboarded into this full suite of products, which SoFi mentioned in their FAQ. They want to have across the board perks for you as a user. So basically what I'm saying is that the diversity of product lines is equal to a higher level of cross-selling, since all of a sudden, as a result of these checking and savings accounts, you are now a SoFi banking customer, a SoFi Invest customer, a SoFi insurance customer, a SoFi credit card customer, so on and so forth. So while the cross-selling has previously been happening organically, in other words, SoFi has all of these products and you can just choose whichever one you want. What I'm suggesting here is that SoFi Plus, as an offering about to be introduced, could serve as the connective tissue, essentially the infrastructure or the scaffolding, actively pushing more and more cross-selling through perks. Of course, this is a more aggressive push than the current SoFi Plus benefits are listed, and the business might want to keep the streams relatively separate, not being so proactive and aggressive. But if they are thinking of cross-selling in the same way that I am, every single investing analyst on Wall Street has absolutely no chance of correctly valuing the business's underlying potential, because SoFi, for the past 6 years, it seems, has been slowly putting together all the individual pieces of their business necessary to close the loop at becoming a full end-to-end fintech solution. And I personally think that SoFi Plus could grow to become the hub or the connective tissue of all of these different streams of business and leveraging all of their avenues for cross-selling. If so, we haven't even begun to see the powder keg of explosive growth that this company has ahead of it. And as always, for constant SoFi news, in-depth analysis on the business, follow this channel, subscribe for more, like these videos, share it out on social media so more people are becoming aware of this company. I would love to hear your thoughts on what you think of this theory, on what you think of this video in general, and of this research. Please let me know in the comments below. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.